Hello, everyone. This is Jeff Wright with Fish Creek Capital. Wanted to show you a second tool that I love using when evaluating companies for our portfolio, specifically dividend growing companies, which is what we like to focus on here at Fish Creek Capital. You'll see behind me a website, fastgraphs.com. I do have a subscription to this website. I don't know that they have a free version, but the prescription is subscription is pretty inexpensive. It's like $50 a month or $55 a month, and it just gives you wonderful data, easy to evaluate and look at, just perspective on what companies are priced at and what their fair value is. So let's dig in and look at it. Let's just start with the broader market. Like I've talked a lot about the market being overvalued. You hear that in a lot of places. So let's see what the S&P 500 shows from a price perspective. We're going to use the SPY as a way to do that. You can see here just on recent searches. You can also click here on popular searches, and it'll show you what I guess other people are looking at. And the SPY is on this list as well. So it represents the S&P 500. It's an ETF. We're going to just click on it. And it's going to pull up this graph, and it's going to have a timeline with it, which is really cool. So it just defaults to the max timeline, and then you've got all these lines down here on the graph. So the one that moves, that's black, that's up and down, squiggly, is that's the actual price of the S&P 500, or the SPY in this case. The black line is the current valuation. The blue line represents the normal price to earnings ratio, or PE ratio, and then the orange line down here represents what is considered a fair value ratio. So you can see that the squiggly line, it's you can just see how it constantly moves up. So that's pretty cool. So like if you even look back here, here's the date, to back on December 2008. As far as markets tend to go up over time, you can see if you would have bought it, how much it's gone up. And what is really neat, you can click on, like put your mouse and click on a time frame, and then click up here at the current, and it's going to show you that your total annual return would have been 14.76% in this time frame. It even includes dividends and that data as well. So let's let's zero in on what is the S&P worth right now. So over on the right, you've got fast facts, and then key graphs, or the graph key. If you look right now, the blended PE for the S&P for the SPY is 21.59. The normal PE ratio over this time frame is 19.8. There's an average operating or earnings growth rate of 8.21%. So if you can see up here, like even just in February of this year, the SPY had a PE of 24.79. So it was overvalued. Like if you would have bought it just from scratch right there at that high of a PE, you would be losing money, at that rate. And if you follow over to the normal PE ratio, uh, and click again, it's going to tell you, you would have an annualized return of 3.76, percentage return at that PE. So let's come. So we needed the market to come in. So that's what you see right here, this drop down. So now we're at the 21.59 on the blended PE, and if we take that, let's hear that. I clicked too soon on that. So if we go down to around 20.84, and increases your return to 11.32%. So that's pretty cool. And that's just sticking with the normal PE ratio of the SPY. So this is a tremendous tool. You can, I'll do another video on it, but if you're wanting to do your own research or just analyze companies yourself, I highly recommend fastgraphs.com as a way to do that. They have a YouTube channel also, and they'll actually review companies and things. So another great tool, or their YouTube is another great tool when it comes to watching content on just finding wonderful companies at great prices. Check it out. I think you'll really like it. If you have any questions about how to use it, let me know below. We use it a lot and really, really do benefit from it.